what is the difference between financial independence and financial freedom? Come on, you can't just lay it out in the
Yeah.
answer it.
All right. Well, I mean, the simple answer really is financial freedom. If you remember the three income buckets that I just talked about, and that's why this is, for me, always back to the basics. When people have that kind of clarity, and I literally just watched another clip of Oprah saying, being interviewed, what do you think people lack these days? People don't know what they want. So having that clarity is hugely important. So in this particular case, it's also the same thing. So financial freedom from us is defined as you have enough passive income to cover all of your basic expenses, because that means you can free up your time. So think about the traditional definition of retirement. You are able to not work, but you got income that'll sustain your lifestyle. Okay. At the same time, at TYT, we take it to multiple levels. That's what we do. And so that's level one of financial freedom, is just cover your basic expenses. Then level two for a lot of people is to actually replace their job income, because this is why we call most people's jobs just over brokes or the golden handcuffs. They pay you just enough so that you are able to afford all your basic expenses. But what about that extra? You want to travel, you want to eat out, you want to have good Christmases with your family, you want to buy them presents, you want to celebrate birthdays. That's the extra that you get from your job income for most people. And that's what keeps people there. That's level two of financial freedom. And then level three is what we typically would call, and Tony Robbins uses the same thing too, is do whatever you want, however you want, whenever you want, for as long as you want, with whoever you want. Kind of like what you and I were talking about before we started recording this, Laurel, is that we want to have options and choices in life. And financial independence is basically, the biggest difference is that financial independence can come from all three buckets. All three buckets. So for example, earned income, let's just use real estate terms right now, or real estate strategies. Wholesale assignment is a huge one. If you want to become a property manager, that's an earned income as well, because some investors do take that route. They become property managers themselves, so they manage their own portfolio and they manage other people's portfolio, so they can go into long-term rental, short-term rental, or mid-term rentals as their specialties as well. People can also become active managing joint venture partners themselves. To me, that hovers between earned income and passive income, but really, more accurately speaking, from a tax standpoint, it's more active income. But the idea really is, again, you build your pot of money through that, and then you can start to build your passive income. Or what I've seen also is that a lot of our students, they do have some resources because they've been working 10, 20 years in their lives now. They have some resources. They will build both incomes at the same time. And once they got in that income number big enough to cover their basic expenses, they basically fire their bosses and go, I'm going to go full-time on real estate now. And to me, that's financial independence, because they are not relying 100% on passive, because the number's not strong enough yet, but they know enough strategies now to actually do everything. Or they can become builders, and builders really were working off of both earned income and equity income bucket as well.